In this video, I'm going to tell you about the decision-making process for the best time to sell your house. Homeowners have a lot of misconceptions about the timing of the sale of their property, and this is exactly the topic that we're going to cover. If you're meeting for the first time, my name is Vlad. I'm a real estate agent with the Purple Tree Real Estate Group in Toronto, Ontario. And on this channel, we're dedicated to providing you with the most accurate and latest information about what's happening in the real estate market, while at the same time helping you build your wealth brick by brick, all the way from a blueprint into the completed house. At the end of this video, I'm also going to give you one bonus point, which has to do with timing the real estate market. And I know what you might be thinking, this is ridiculous, timing the markets never works, but in real estate, due to the high inertia of selling real property, timing the market actually does work, and you'll see how. Let's jump directly into the main topic, and to kick things off, I want to talk about the seasonality of the real estate market. Sometimes it coincides almost directly and overlaps almost directly with what's happening on the calendar itself. So, a real estate agent is telling you that we're in the spring market. You look at the calendar and it's the month of February, you're thinking it's not exactly the spring market. Well, let me explain that to you. And I'm going to give you the whole journey starting from January 1st all the way to December 31st, and how different seasons of the calendar affect what's happening in the real estate market, both in terms of volume and prices. January 1st, a lot of people are hungover. They're looking outside the window. They're seeing snowbanks on the roads. They're thinking about a tough commute when they have to start going back to work. The kids are back at schools, all sorts of family-related considerations, and real estate is the last thing on people's minds. So the first 2 weeks of January are very slow. Starting from the third week of January, things start picking up and ramping up towards the month of February. Remember I mentioned just a few seconds ago that the month of February is the spring in real estate agents' minds? And we, as real estate agents, traditionally do call this a real estate spring market. So February 1st, all the way till the end of February, is a great time to sell. And we often advise our clients preemptively in the prior year to plan everything out in such a way that the MLS listing timing falls onto one of the days within the month of February. And it's advantageous for two reasons. Number one, the February volume of sales and the number of properties in the inventory, i.e. properties that are sitting in the marketplace, is still relatively low as compared to what's happening later in the year. So that's the first thing. And the second thing, which is as important, is that you are in the position to get the same price as you would later in the year, as in April or May, in the month of February, without having to endure a longer process because of the competition consideration. So the process is shorter, the price is the same. It's a no-brainer. It makes sense to try and list in February. We're going to talk about the economic considerations in a bit. Then the month of March rolls around, and the month of March has two gaps in the middle of the month. The first week is good, and then all of a sudden kids are out of schools, and the parents are either sitting with them at home or they're traveling, so real estate transactions fall precipitously. So there isn't much happening in the week 2 of March. Week 3, private schools are out. So that's another week. So week 2, public schools are out. Week 3, private schools are out. And the proportion of people enrolled in private schools and private education is, of course, much smaller than kids in public schools, but it still does affect the market. So you have to be cognizant of that gap in the middle of March related to kids being out of school. Things pick up almost overnight in the 4th week of March, leading up to the month of April, where things continue going upward, and then they plateau by mid-April. And that plateau lasts all the way till the end of May. So that's the hottest spring market you can imagine over the entire year. And we're talking about, it bears repeating, we're talking about a traditional pattern that we've seen over the past few decades. End of May, things start slowing down. In June, the first 2 weeks, we have a gradual decrease in volume and a slight decrease in prices. And then from the second part of June all the way to the Labor Day in September, things are much slower than they were in the spring, or they will be traditionally in the fall. Summer is a good time to buy, but it's not a great time to sell. So we are in September. Labor Day, everybody, just like after the New Year, thinking about having to return back to work. Kids are back at school. All the traditional family-related hassles that people have in the month of September fall literally on that Labor Day. So anxiety is at the highest. People are not thinking about real estate. They're thinking about sending kids off to school. After that's done, literally the next day after kids go to school for the first time in September, the market picks up again. The market picks up, and then we have the fall market right after that. So second week of September all the way to the middle of December is the strong fall market, economic considerations aside. In the middle of December, things start slowing down, and the last 2 weeks of December are very, very slow due to the holidays. I must say that over the summer and the last week of December, people that are on the market and selling are serious. and buyers that are on the market and looking are serious as well. So even though I'm saying that the market is slower, it does not mean it's necessarily an awful time to be active, especially if you're a buyer. In fact, those two time windows are the most advantageous for you as a buyer because the prices fall by 5 to 8% just due to the seasonality. And you would be well advised to seriously look at what's available in the marketplace in July and August and the last 2 weeks of December, because great deals could be had during those two time windows. So that's about the seasonality of the market and traditional patterns that we've been seeing over the past few decades. Now, let's talk about the economic considerations and how they tie into the seasons of the real estate market. Last year was extremely volatile. We saw interest rates come up from 0.25% to 5% over the course of 3 or 4 months, extremely rapid, sent shockwaves over the entire system, definitely affected the buying sentiment and the buyer's ability to purchase, to obtain mortgages. So things have slowed down to a halt in 2023. Between the month of June and the end of the year, we had a completely non-traditional patterns occurring in the marketplace. Things were extremely quiet. The volume was very low. The prices were depressed. A lot of people have taken the properties off the market or decided to lease them. A lot of buyers could not purchase anything because all of a sudden they were not able to qualify for mortgages, or even if they did, they felt uncertain that they would be able to carry the monthly expenses associated with mortgage payments. So things were very slow. And all of a sudden in 24, things picked up. Now, there's a lot of conversation amongst the analysts as to what's going to happen with the announcement from the Bank of Canada with regards to the policy rate. And the consensus seems to be that the policy rate is likely to go down by a quarter point or maybe half a point during the announcement in June 5th. So that's the target date by which a lot of people are thinking the rates will start going down. And of course, that's a positive news. The market is active partly because of this expectation. The buyers are active partly because of the expectation. They're thinking they will be able to refinance their properties at a lower rate, or they're thinking that if they're on a variable rate mortgage right now, or they're thinking about getting into a variable rate mortgage, that things are going to be looking up for them in terms of the outflow in cash on a monthly basis after the announcement in June. So it's more likely than not that after the policy rate decreases, real estate prices will start climbing up. And we're going to have an extremely active fall market from that perspective as well. That's what's happening from the economic standpoint. And I'm oversimplifying, but you can probably, by looking at the patterns of the seasonality of the marketplace, coupled with what's happening in the economy, make the right decision as to when to go on the market. And I think now is the opportune time for us to go into the bonus point that I talked about. And the bonus point is about timing the market. I know what you think, and you're thinking timing the market is the most ridiculous thing that I've heard. Yes, day traders in the equities market or the crypto market go out of business within the first year. Most of them do. And that's the reason for the skepticism that you probably have in your mind. You know the track history of those day traders. And just a quick explanation. Day traders are the traders that are, say, active in the equities market and taking positions or buying something that they're planning to sell within the next 8 to 12 hours. So within a day, they take a position in the morning, they get rid of that position by the evening, hoping to make some sort of a delta in the hours that they're active and they're actually watching the markets. A lot of those traders fail miserably within the next 12 months. And interestingly, there is a very similar pattern with real estate agents. Only 13% of the real estate agents survive past the first year of operating. 87% fall off the wagon and their career ends at that. They might still hold the license, but they're no longer actively trading real estate or brokering real estate deals. However, there's one major difference between the equities market and the real estate market. Real estate market has a lot of inertia. It takes a while to sell or buy real property. So if you take that difference into consideration, all of a sudden, the prospect of trying to time your decision does not seem as absurd as if you were to think that those two markets are exactly the same. So if it doesn't work in one, it would never work in the other. So let me give you a couple of examples of how you'd go about making that decision and timing the market correctly when it comes to real estate. So we are in the month of March, and let's say that we're agreeing with the analysts that are saying that the policy rate is going to decrease in June. The announcement is on June 5th. And then as a consequence of that, real estate prices are going to go up by default. And let's just say, for the argument's sake, that the prices are going to grow by 10%. This is just a quick mental exercise. Let's say now that you are thinking about upsizing. Your current property is sitting at $1 million in today's prices that are March of 2024. And the home that you're thinking about buying is going to be worth $2 million right now. Now, if the market grows by 10%, the property is going to be selling in the fall. Yours is going to sell for 1.1. The new home that you're thinking about buying, instead of costing you $2 million, is going to cost you $2.2 million. So out of pocket pocket expense is going to increase by 100,000. So if you were to do both transactions right now, you would have to shell out an additional $1 million in order for you to buy this upgraded home from 1 million to 2. And if you were to transact in the fall, you would be selling for 1.1 and buying for 2.2. It's a $100,000 difference. So obviously, if you look at it from this perspective, it makes more sense for you to act now instead of waiting. Now let's take the inverse of that. Let's say that you are actually thinking about downsizing and you're sitting in a property that's worth $2 million in today's money, and you're thinking about buying a property for $1 million. If you were to do this transaction right now, you would net in your pocket $1 million. If you were to do the transaction in the fall, you would actually be selling for 2.2 and buying for 1.1. Remember, 10% increase? And then you're going to be netting $1.1 million. So $100,000 surplus just because you decided to wait for 4 to 6 months. In this case, obviously, it makes sense for you to wait for a little bit. Now, you might be thinking, I'm a first-time home buyer, so that doesn't apply to me. What do I do in this case? If you're a first-time home buyer and you're projecting that the prices are going to increase by 10% by the fall, wouldn't it make sense for you to actually jump into the marketplace right now? It totally would. And I want to cover one last case where you actually thinking about a lateral transaction. You buying and selling at roughly the same price point. Maybe you just want to change neighborhoods. Maybe you want to go into a better school catchment. Maybe you want to move closer to your kids or to your family. Happens all the time. You're buying and selling for $1 million. So really, irrespective of what happens in the marketplace, whether it decreases or increases, whether the Bank of Canada gives a favorable announcement that confirms the analyst's expectations or acts completely independently, and that's something wild and weird, it doesn't really matter. You are planning a lateral transaction. So from that standpoint, you can time both the sale and the purchase in any way you like. So if you think that your garden looks at its best at the end of May, by all means, put up the property for sale at the end of May. Actually, it would probably land you in a fantastic situation where you're selling sometime in the late May or early June, and then having sold, you'll be buying in a slower market. Remember the seasonality, the market prices drop over the months of July and August by 5 to 8%. So that could be a very advantageous timing for you. But really, other than that consideration, it doesn't matter. You're buying and selling roughly within the same price points, and both transactions occur over a couple of months. So there wouldn't be a huge difference in saving the money or losing the money over that period of time. And that's about all I had for this video, guys. If you like the content, hit the like button, consider subscribing to the channel. And if you have comments, the easiest way to engage me in a conversation would be to post them in the comment section. I would respond to all the comments, and this is the easiest way of starting a conversation with me, short of picking up the phone. I want to thank you for being here on the channel, watching the videos, and I'm looking forward to seeing you in about a week's time on the next video.